Federal regulators seized control of the lender.
This is a classic bank run.
Silicon Valley Bank, the 16th largest bank. European markets have closed down more than 3%. Credit Suisse plunged to a record low. Prudential tumbled 10%, up to 50 billion euros from Switzerland's central bank. First Republic getting a $30 billion capital injection.
SDIC. So what is actually SDIC? Today, I'm going to explain to you what is SDIC, what does it offer, how does it keep your money safe, and a crucial tip on how to actually extend this service to make sure that you are more covered in the future. SDIC actually stands for Singapore Deposit Insurance Corporation. It's just basically a company that offers deposit insurance in all the banks and all the insurance companies in Singapore. So there are two main schemes that SDIC actually offers. The first one is the Deposit Insurance Scheme. The second one is the Policy Owners Protection Scheme. The Deposit Insurance Scheme covers deposits such as savings account, current account, fixed account, and CPFIS accounts that you hold with a full bank or a finance company in Singapore. The scheme will compensate you up to $75,000 per bank or finance company if they go under. A trick is to open multiple bank accounts with different banks. So for example, let's say I have a DBS account. I would open another UOB account or OCBC account. That way, this $75,000 is actually shared per bank per user. So which means that my DBS account will have up to $75K insured, OCBC another $75K, and then UOB another $75K. This will actually raise the insured amount of your total deposits. So instead of putting everything into one bank, you can split it among 3 banks. The second scheme I'm going to talk about today is the Policies Owners Protection Scheme. This actually covers life and general insurance policies. So basically any insurance policy that you buy from, for example, Prudential, AXA or Aviva. For life insurance policies, the scheme will cover up to $500K per life per insurer for death benefit. This means that if you have a policy that covers you up to $1 million, and if the insurer goes under, SDIC will actually ensure that you are covered up to only $500K, which is actually half of that. For health insurance, the scheme will only cover up to $300K per holder per insurer. So same thing applies. Basically, if you have a policy that covers you more than $300K and your insurer goes under, SDIC will cover you only up to $300K per insurance company. For vehicle insurance, it's even lesser. It's only up to $50K per vehicle accident for damage claims. But of course, it's not the end of the story. As we all know, everything comes at a cost. In the event of a bank failure and all these insurance schemes are actually activated, what happens is when the money is all used up to pay back all our deposits, and if MAS decides to raise the cost of the insurance, the banks will actually raise the cost of their financial services, basically the cost of them operating, which then on they will pass the cost to the consumer, which is you and me. So let's all pray that this never happens. And if there is a bank failure, I think there will be definitely more inflation if there's any sort of bailout by our central bank. So I hope you learned something new today. I hope you learned something new about SDIC and how it safeguards our deposits in our bank. If you enjoyed this video, please give a thumbs up and like and subscribe.